What is up, everybody? I'm Scott Melker, and this is the Wolf of All Streets podcast. Today's guest is the founder of The Block, the leading media and information brand in the blockchain and cryptocurrency ecosystem, with arguably the best newsletter in the space, which obviously pains me to say since I have a newsletter. Mike spent years driving in essential roles around the development of Disney, Google, Venmo, and other major companies. It was his curiosity that led him to transition towards crypto, where now he is the managing director of G2M Ventures, helping major players in fintech and traditional finance enter into the crypto space. With his background, it's safe to say that Mike Dudas is one of the most intelligent and well-researched people in crypto, so I can't wait to dive deep into his thoughts on institutional adoption and the future of this space in general. So Mike, thanks so much for coming on.
Yeah, thank you for having me. It's a pleasure.
Of course. So before we get into questions, once again, you're listening to the Wolf of All Streets podcast, which airs twice a week, and we talk to your favorite personalities from the worlds of Bitcoin, finance, trading, art, music, sports, politics. Show is powered by Blockworks Group, a media company with over 20 podcasts in their network. Check them out at blockworksgroup.io. And if you like the podcast, follow me on Twitter. Check out my website, join my newsletter. You can do both of those things at thewolfofallstreets.io. So now to get into it, Mike, I was stalking your LinkedIn pretty hard and couldn't help but notice that your top skills were persuasive emailing and functional tweeting. So do you have any hot tips on how to do those things? Because they sound like very useful life skills.
Yes. So what's interesting is I would say that the functional tweeting became dysfunctional actually over the past couple of years as I entered the crypto space. It's virtually impossible to spend a considerable amount of time productively and engage with other folks on a regular basis and stay sort of in a really positive, exciting, positive sum environment. And particularly if you have strong viewpoints and opinions. So I would say it's become a bit more dysfunctional and frankly, it was much better. I was a better functional tweeter when I was in more sort of boring, bland industries and ecosystems, not sexy parts of fintech. And when you're trying to sort of drum up interest and excitement. On the persuasive emailing, it's such a critical part of sales, both enterprise sales, primarily enterprise sales is what I've been doing for the past decade, and sort of the email is everything. But I think we've also seen that shift. That's probably a 4-year-old thing that I added in my LinkedIn profile. And I think we've seen, email transition to text messages and persuasive, again, tweets and direct messages. I mean, basically any channel that you can get, Telegram, et cetera, to connect to somebody. So I need to update that.
Yeah, you seriously. It may be the most marketable life skill now to be able to deliver a concise message in under 200 characters. It really has
Absolutely.
changed.
And I frankly have overdone it, and you've probably seen it. So I think to do it, I think you do a good job of staying on message and frankly, the frequency not being just too overwhelming. So I think if you reveal too much about your thinking process out loud, if you do it and you're a genius like SBF, it's one thing.
He's incredible.
Or Tarun. But if you're like me and you're just sort of spitting out, every thought that's in your head and every article link, it can get a little cloudy.
Indeed. So to dig into what's more important here, obviously you have a extensive resume in fintech and beyond, as we sort of dug into there in the introduction, but you decided to take all of those skills and start The Block. Unless I'm missing something there in the transition, but at least outwardly it appears you were like, we need to start providing better information, doing better research. What made you make that decision and head into this space?
So I've been interested in cryptocurrency, digital assets, whatever you want to call it, but really it was Bitcoin in 2013 when I became interested. And I was actually working at Braintree, and we were considering adding crypto payments, Bitcoin payments to the gateway so that customers of some of our biggest merchants at Braintree, Uber, Airbnb, and others could use Bitcoin to pay. The idea was, lower transaction costs than credit cards. And, this is back when sort of the idea of P2P payments and of low cost payments via Bitcoin was pretty exciting. So we had conversations with Coinbase. Unfortunately, PayPal purchased Braintree while that process was happening. And that product never got rolled out. I said, unfortunately, it might have actually been fortunately, because, what's proven out over the last 5-6 years is that folks just haven't at scale to date wanted to pay with a highly volatile asset. I think that the narrative around what Bitcoin has changed from digital payments to something more like a store of value. We could talk more about whether that's changed. I think that has changed with the advent of stablecoins, but
Agreed.
But certainly, that's what got me excited. When I looked to enter the ecosystem full time in 2018, it was sort of beginning of 2018, late 2017. It was a peak. I'm not an engineer. I'm not a financial markets person. So I looked at where I thought I could add value. And I'm somebody who's typically worked on bringing early stage financial technology to, let's call it 50 to 100x the audience of those early adopters. So I felt like with all this rolling information, competing protocols, multidisciplinary knowledge required to understand digital assets and cryptocurrencies, that it was really important to have a trustworthy, independent research and media source, knowing that most of the industry sources were owned by very wealthy people with strong stakes, whether it be in Ethereum, Joe Lubin and Decrypt, whether it be Barry Silbert and CoinDesk, and felt like an independent source was important. And that's sort of borne itself out with our popularity over the past few years. I really did want to reach a retail audience when I started this in 2018, but that audience hasn't really materialized at scale. And so the block has primarily become a institutional insider B2B publication, although that is changing over the last, call it 4 to 6 months.
I want to dig into what you just said. First of all, I need to say that I felt like the block has been around since 2014, 15, 16. So it's crazy to me that it only started in 2018 because you've become such a leading brand in the space, of course, which is impressive. But I want to dig in. You said that it was originally intended to be a retail offering and you haven't seen that happen at scale, which I find fascinating because, I guess from the outside looking in, it seems like that's where just people on crypto Twitter go to get their information, but it sounds like it's not really the case.
Yeah. So our original tagline was crypto simplified. And I should probably clarify, we probably originally, I thought, hey, we'd have, 5-10 million, monthly users and page views. And what we actually found is we want to create, and we are creating a sustainable business while producing, high quality information. So in order to do that, I guess when I say retail, I kind of mean the person on Robinhood or, who's sort of trading, and where we've really found our sweet spot is to power traders and folks who understand market structure like yourselves, all the way through to really significantly large institutions, the Fidelities of the world, backed Gemini, folks like that. And we realize that you need a mixed, and you see a lot of this right now, a lot of debate about tech and media, and crypto is one small part of that. But what we recognize is you need a mixed model. So a model of research-driven subscriptions and, sort of ad-supported, sponsorship-supported, partner-supported journalism and media. And they're really complementary to one another, particularly when you're focused in a what is an emerging and rapidly growing niche.
Is the goal to eventually become the same sort of scale or size as a Bloomberg offering is to traditional markets and to normal markets, something that has increased velocity of information, right on time, exactly what you need to know? And a Bloomberg terminal obviously is tens of thousands of dollars, so we're not talking about that per se, but sort of that for your average trader.
Yeah, that's the evolution of the product and the brand. So, we started with, and I think what most people remember is the news, as you mentioned, Frank Chaparro and Stephen Jang, and it really started that in 2018. And to get quick attention, even Larry Cermak, who's an incredible researcher and leads our research team now, was doing a bit of news and supporting the news team, but to get to, and so we feel like it's an emergent asset class that will over time continue to eat larger and larger parts of the financial markets. You're seeing that happen. I think it's what you want to talk about, which is institutions starting to participate in different ways. And and so from a product perspective, We've moved from news only to news plus research to news plus research plus data. You're continuing to layer in those things. So now we have a data dashboard that isn't necessarily like we're not ourselves necessarily creating those data points, but there are fantastic companies, like Coinmetrics and many others, Paradigm Research. So, and we're pulling information from them, aggregating, and then what we're trying to do is put insights on top of that and put context around it. We feel like that's the phase or the stage that we're at. And frankly, people don't necessarily know what the right data points are that are driving value today. So we try to, we don't necessarily recommend particularly protocols, particular tokens, but we try to put context around what's happening. And then we think over time it will evolve where many more people will have the sophistication to use the raw data themselves to make their own decisions and their own inferences. But I think the set of folks who can do that reliably today and make money consistently is probably in the low thousands. And so, I think there's probably 50,000 people who think they can do that, but that's not true.
Oh, I agree. And I would probably say it's even more skewed towards failure. So we can glean from that obviously the business has evolved from, like you said, to news all the way through to data. So I guess that then begs the point, begs the question, who is using that data, right? You say that at the end of the day, you want people to be able to interpret themselves, but you wouldn't be creating that data unless there were much larger players that are looking at it and trying to make decisions based on it.
Yeah, precisely. So there's a really interesting mix. And because we've been fortunate enough to build a real business model, we're able to support a research and journalism team that is really robust and actually broad and deep. So in other words, we have some engineers who can go really deep on protocol dynamics, technical changes to protocols, and there's an audience for that, which is typically startups or investors who are looking. So startups that are looking, hey, what should I build? What's a technical trend that I should follow? There are investors who are saying, hey, what companies or trends should I invest in? But then we also have folks looking at market structure. Larry, does quite a bit of that. Ryan Todd on our team, for example, does a different set of market structure. So he looks at like publicly traded companies, things like Square and Silvergate, and the implications around what they're doing. MicroStrategy takes a pretty strong macroeconomic view on what's happening in the crypto space. So we get hedge funds interested in that. Larger scale investors. We have some folks who are doing sort of blockchain-y type research, and then others who are doing actual financial market infrastructure, so who's doing custody well, who's doing crypto as a platform, crypto security, blockchain analysis, things like that. And the audience there is really interesting, right? We have governments as customers, local, federal, and then we have a whole nother section where we're looking at, did a humongous report on central bank digital currencies. So again, not only are regulators interested in that, but also companies who want to understand how do we fit in. So I can't speak to specific customers, but folks who are issuing private money, and we talk to those folks all day and their customers. Not only of the public research that we do that you get with a subscription, but conversations and one-on-ones with our research team.
It's interesting. You just said that governments are customers. So clearly we're seeing a major shift from what drove the market in 2017 to 18 to what's happening in 2020. So I want to really drill into that. Why is a government a customer, and what are they looking at here? Is it from a regulatory perspective, trying to figure out what it is? Or is it because governments may actually want to invest in some way, as a reserve, like we've seen companies do? What are governments looking to do here?
Right now, we're seeing they're at the knowledge accumulation phase, and not only knowledge accumulation, but hey, how is the research that we're doing being synthesized by some of the leading minds, right? So it's almost like action reaction. Hey, BIS puts out something. Okay, well, how do some of the smartest folks out there then interpret that and put that into their workflows? So we're seeing that on the institutional side. And call it stablecoin issuers and folks of that nature will do quite a bit around, like, again, a massive stablecoin report around the implications of sort of issuing KYC'd, highly regulated money versus all the other different types of coins. And so what happens is we get people join not only for our research but for the discussions around it. So we have a Slack group, we have and this from your own business. It's a lot of those private, deeper conversations where folks are accumulating knowledge, but it's all spurred. The way that you build this business is it's all spurred by putting out some strong viewpoints, research, and analysis. And it can't be only one of those things. I've seen, a lot of businesses built around, let's just say, just opinion, right? Or just analysis. And if you're not doing original research and context setting and description. So, when to get back really quickly to your question about central bank digital currencies, we did a really robust review, sort of across, I think, 15 to 20 different countries or entities, the EU, and said, hey, here's what they're doing. Here's how they're thinking about structuring it. Here's the timeline. And so the benchmarking there got folks very interested in what other folks were doing. And then you become that sort of central, that hub of inbound and then outbound synthesis.
It's interesting. I used to always make the argument that crypto was a trader-driven market, right? It was completely speculative. So it was the only market we could look at a chart and reliably perhaps have a chance to trade it. But I've argued more recently, certainly in the last few months, that this market is no longer driven by traders, right? We're seeing spot kind of buying lead ahead of leverage, but also the narrative has just changed. We see these huge buys from institutions. So why do you think institutions are all of a sudden finally so interested? Because we've been hearing about it for years. They're coming,
Yeah. So it's markets, I think, better than I do. So I can't necessarily speak deeply to, institutional mentality, but what the smartest people, again, are researchers who are speaking with these folks, the data companies that are helping them make the case, whether it be to their LPs or their shareholders to make these decisions. One is it's been done a few times now, right? We have public companies who have taken an extremely strong stand. We have some of the most successful historically macro hedge fund folks in the world who have come out and said, hey, I actually believe that in a pretty significant asset class here, where store value is exceptionally important. As a particular property and investment allocation as part of a portfolio, we have something new and emergent that just won't die. And these are simple things. You don't overthink it. If you follow, for example, what Michael Saylor is saying, if you follow what any of the hedge fund luminaries are saying, it's basic stuff that, if you're on crypto Twitter, people have been reciting it like a mantra for 5 years. It's just actually coming true now, right? And it's coming true in a non-hysterical way, in a methodical way, and in a relentless way. And it's happening across multiple fronts. So you have, on the institutional side, you have the biggest one we haven't talked about yet is PayPal not only giving the sort of stamp of approval to cryptocurrency and making it available to their customers on the consumer side, but also saying we are committed to this being a form of money that folks can spend at our 25 million plus merchants next year is humongous. And then not only stopping there, but Dan Schulman getting out there and saying, look, we've done this in a supremely compliant way. We've done it with Paxos. We've got the stamp of approval from New York State. They're going all in. And so, that's just, it doesn't get, in my mind, more powerful than that on sort of the commercial side. So you've got that, then you've got folks, so you've got the narrative of like sort of payments, the biggest fintech in the in the West, really going all in as a fast follower. And they're doing it as a fast follower because Square did it, right? Square's eating their lunch in terms of, Cash App's growing faster than Venmo, faster than PayPal. And Bitcoin's a big part of the story. It's sexy. They market it exceptionally well. And so, they've done it the right way. They started with a closed Bitcoin product and then they opened it up so that you can, basically move your Bitcoin out of the Cash App, if you'd like to. So obviously PayPal and Robinhood have limited products now where it all happens, it's kind of an IOU. Yeah, exactly. It will evolve over time. So that's been a big driver to your point about spot driving this. There's just so much demand right now. And what happens obviously when there's an incredible amount of demand, more demand for the asset than, sort of new supply in terms of what's being mined, price goes up. It's a really exciting time. At the same time, I'm not getting the hysterical stuff that I got in 2017 from my family being like, hey, I need to FOMO into that. And I'm seeing, very reasonable people say to me, okay, the time horizon is different. I don't want to trade this Dudas. But, do you think this is something that I should sort of just set it and forget it, dollar cost average in and hold? So the whole mindset, that being said, so that's the positive. It's not what got me into crypto, in 2013, which was, again, peer-to-peer money, this idea of low-cost payments. Let's totally transform global digital internet money. I do still think that that's critical to Bitcoin's, development over the next decade. And I actually deeply hope that PayPal, allowing folks to spend Bitcoin at 26 million merchants plays a part in that. I think it will, by the way, because as you expose people who own $100 or $200 worth and, becomes, 150 or, it goes up 50%. I think that type of person, might be willing to actually spend it. So it's going to be really, really interesting to watch.
I've always found it interesting though. And you mentioned sort of the difference now between Bitcoin and stablecoins, which is worth digging into, because when you were talking about it in 2013, you were just talking about Bitcoin, and it's not the best, peer-to-peer money, even though that's the name, the white paper, peer-to-peer cash. But now we have stablecoins. Aren't stablecoins just a better product than PayPal itself?
They're a better product than the way the PayPal network works today. In other words, PayPal's effectively sitting here as a rentier, like just effectively taking a rate because of the network that they've built out. That's a take rate that's just higher than market. I mean, it is market because the PayPal button is on tons of sites. The good news is stablecoins are coming along. And this is an area that I'm extremely passionate about and most likely the focus of the next business that I build, coming along at an incredibly wonderful time. You may see sort of the memes and the jokes where somebody will show a mobile checkout page and it has like 8 buttons. It's like Shop Pay and, Amazon Pay and, Google and Apple Pay and all this. Point being, it's going to get really competitive here. And, so here's what stablecoins have the potential to bring. One is a set of rails that are much lower cost to move money, not just for payments, but for sending money from here to another country. They have not only consumer implications, but also business implications, right? I'm a contractor now. When I get paid by some of the companies that I work with, I'm paying just insane Chase, transfer fees, this, that, and the other thing. Stablecoins, have the potential. They're not at scale today. It's not easy to move them from one endpoint to another today. But I think that's going to change really, really quickly. And the reason is because you have so many brands competing with PayPal for your attention and for my attention. And in order to make merchants happy, in order to make consumers happy, you're going to have to add more value than the sort of convenience of PayPal, right? And how do you do that? More value on the consumer side, perhaps higher yield on my stablecoin balance. I don't know how sustainable the yields are that we're seeing today. They're probably not sustainable, but certainly higher than 0.2%, right?
Higher than nothing.
Yeah, higher than nothing. It's great. On my business account at Chase, I'm getting nothing. I mean, it's nuts. So, some benefit there. Get rid of some of these fees for moving money internationally. And then I think that on the merchant side, you're going to be able to start to give some rebates and some relief to merchants who do accept stable coins. And this is where it's going to be interesting to watch what PayPal does. And frankly, I'm excited to see which ones of the sort of neobanks really pick up I'm excited to see which is the first big branded neobank to offer, sort of this new Visa, USDC. Let's just call it a little money account over here, where I take $1,000, put it in, get a yield that's maybe 6%, can move that money around via the Visa network to spend it if I want. I mean, I think that's going to be really attractive when paired with an existing strong brand, call it a Chime or something like that. And somebody's going to do that.
They're going to do it. I mean, we're already seeing huge banks in Europe and abroad, even like within the last week or two, starting to say that they're going to offer, these services to some degree. And, the model has now been proven by the Voyagers and BlockFis and Celsiuses of the world that you can, safely park your money and gain yield. So whoever can combine, sort of as you said, you have to be a bit of everything in your business. One of these banks is going to have to step in and be everything for this business. And I think this is like 3 to 6 months, not 3 to 6 years at this point. Precisely.
Yeah. I delete all my tweets because I've had so much trauma from tweet attacks for years. But mainly, but I've said the same thing. I think right now, some of what we're talking about sounds implausible. But you saw it. Look, Tether went from like 2 billion to 20 billion in total volume, or in total, outstanding stable dollars this year. You're going to see USDC, I think, or sort of the aggregate non-Tether KYC stablecoins, and certainly if Libra comes into play, which is a little bit more of a perhaps a private money, depending on what they back it with. We're not really sure what that's going to look like when it comes out of the gate, but massive numbers of these crypto dollars out in the market. And it's going to be really, really exciting to see. I think people think that, for example, Novi, Facebook's wallet is just going to be the de facto winner, and I am just so excited to see what entrepreneurs kind of wrap Libra into their products, or Diem, wrap USDC in, but have a lot more choice and less strategy tax than Facebook and how they approach this.
And just less like reputational friction, right?
Exactly, precisely.
We're already seeing Libra rebrand to Diem, as you touched on, just to separate themselves from Facebook. So I don't think it's a far jump to believe that people are going to be a bit resistant to a Facebook wallet as their core choice, right? I mean, people just don't want to mess with Facebook, and giving Facebook control over your money is a pretty big jump.
So it's a huge leap. The thing, however, is that so it's more of an issue for the folks who are talking about and even know that Diem exists today than the, let's just call it, 1 billion plus folks who might actually just see it on WhatsApp, right, or see see an ad in Facebook or Instagram to download the Diem. Is the Diem wallet? It would be the Novi wallet with Diem in it. Yeah. Those folks will just say, hey, and Facebook gives me $5-10 of it probably at some point. I don't know that those folks really care.
Yeah, I agree. I mean, just going back to the PayPal thing, I just still find it so interesting that Jack has obviously forced their hand with Square A.
That's what it is.
Right. I mean, I don't view it as some like corporate ethos that this is the future. I just feel like they have to be in it. Same thing I'm sure you're seeing from institution. All of a sudden, every single institution has a research report on Bitcoin, not because they care about Bitcoin, because their customers are asking them about Bitcoin. And so they have to do it, right?
Unquestionably. But the best companies in the world are participating in cryptocurrency. To get back to, when I think of institutions, again, not being somebody who came from Wall Street, a lot of my research team gets excited about the Fidelities entering all the other wonderful institutions. I get so excited about Visa, right? Like we talked about partnering with USDC, and just so many of the other institutions that are partnering for payments and actual real interesting consumer use cases.
Right. So we have all these use cases, and then we have obviously, if you touch on the store value, the MicroStrategy, I'm putting my money into this because my buying power of the dollar is dying, and holding cash is basically just lighting, our treasury on fire. Yep. So we saw MicroStrategy do it. We've seen Square do it. We're seeing some other smaller companies. What does it take to see the big boys do it? At what point can we expect an Apple or a Facebook or an Amazon or a Google to start talking about, this as a treasury asset?
Yeah. So I would be really surprised if any of those companies, their treasuries are growing by leaps and bounds from, in many cases, sort of natural monopolies in specific markets, and or just insane competitive advantages that continue to compound. So I don't necessarily see tech companies having a need. And they've proven, for example, that they can redeploy capital better. Like they don't store value, right? So I would say tech companies are like the last type of the best tech companies, the ones that you just highlighted. Their cost of capital, I mean, they reinvest their capital in building just monster businesses. And today the market is rewarding them, not with profit, even if they don't have profits, in reinvesting in
right.
The top line. So it would be companies. It would be great to see, sort of IBM, for example. They remind me of MicroStrategy in a lot of ways, where the core business isn't supremely, exciting. It's a consulting and largely a services and consulting driven, data business. Okay. IBM, blockchain is critical to the future. Well, what's the best application of blockchain? Money in all its forms. Okay, park some of your treasury and Bitcoin and put your money where your mouth is. So that would be a more likely one. That would be I could see that being a more compelling strategy.
Right.
I mean, if you get one company of that scale to put treasury in and to actually move the needle, there you're talking about, billions of dollars, and that gets really interesting. And it's not implausible. So I don't know when that's going to happen, and I'm not in the habit of making those wild predictions.
You've been on Twitter long enough to know that you can't make wild predictions, because somebody will dig back 7 years and make a. And
Larry Cermak will own me for it.
Yeah, we'll see. I mean, Michael Saylor, right? People are pulling up his 2013 tweet saying that Bitcoin was basically dead, and God forbid somebody evolve in 7 years or even 7 weeks.
I did the dummy thing, like when he his particular style of talking about Bitcoin it's interesting. It's not like mine, but so I kind of mocked it when it came out, and I said, "Oh no, another one of these guys." But I've listened a lot more, and that was too quick a judgment, and it was a bad judgment on my part. When you listen, he does have a very sophisticated understanding of this being what the long-term trend is here, and so he's clearly bright. And he's actually bright enough to talk a lot of these folks are, Pomp takes a lot of heat, but he's smart enough to talk in a very specific, focused, consistent way that appeals to a lot of people about the thing that he cares about. And it works, and it's been positive. I think you need those folks, and you need the skeptics as well, to keep folks grounded.
And smart people have strong opinions loosely held, right? You're allowed to change.
Well, you're allowed to change sometimes.
You don't just walk the party line.
I've been cast from. I started as a Bitcoin maxi, and got into that cult, and then got turned off by the fact that to be part of that cult, you had to agree with basically every talking point, and then got really interested in Ethereum, being around really brilliant people like Theo Leibowitz and some of the builders that he was working with, and got to know. And you get really excited. And if you're into technology, it's hard not to start to get excited about Ethereum and a handful of the other layer one chains out there and what's happening in DeFi. And you're going to offend folks as you start to get excited about things that they think are a threat. So you just have to deal with it.
Yeah. It's interesting. I think that there's even an argument going back to the Apples and Googles, the FANG stocks, that those are stores of value themselves. Right. Oh, yeah. So they don't need to put their treasury in a store of value if people view buying their stock as a store of value in itself, because, right. So, and then the second argument is that they're just way too big and Bitcoin's way too small.
Yeah, I think your point
you would move them. If Apple wanted to put 1% of their treasury in Bitcoin, they would own every Bitcoin.
They would, exactly. And to your point, though, indexes, as you know, have become such a critical part of people's portfolio that it's literally you park your money there, you don't think about it. And as the tech companies become ever larger parts of those indexes, to your point, they really are effectively a store of value.
That's interesting. Now we have we're hearing about the S&P creating an index product. And I think that also is going to be extremely popular in the coming 6 months to years. That's something you guys are seeing on your end as well.
Yeah, I'm not sure I understood that question exactly.
The S&P is working, I know, on an index product that will be traded.
Yes.
Yeah, and we're seeing obviously a lot of private ones, and that's a huge movement actually in the smaller projects on DeFi is to create these index products. But
and there's so much demand.
You see as a huge evolution here that we're going to start to see?
Yeah. I mean, just the fact that you see so many of these index products, for example, Bitwise launches theirs, trades way above, trades at a massive premium. There's more demand for these products than, the actual fundamentals can sort of secure and be backed. And so people are very, very hungry for index products. They want exposure. This is extremely complex stuff. DeFi, for example, is extremely complex. So full disclosure, one of my clients that I'm consulting with is a company called 21 Shares. They have another brand name called Immune, AMUN, phenomenal company. I'm a small investor, have known the founder Haney for years. They have a set of ETPs, very healthy business, regulated in Switzerland, that's doing well, but they're launching a set of what you just talked about, DeFi tokens that will represent different strategies, right? Indexes. And I won't pump it here too hard, but it could be similar to sort of Wi-Fi, looking for the best yield. If I deposit $1,000, we'll find the best yield across a bunch of different pools. And then other ones like, hey, here's a coin that gives you exposure to all of the different proof of stake protocols, as well as, instead of just owning the tokens like you would in a centralized exchange, you can participate in the economics of those proof of stake protocols and additional coins or tokens and fees. So, you're going to see these more sophisticated products, but they're going to be autopilot because honestly, I don't have the time, the know-how, the access. I live in New York. I can't even trade I can't do this stuff. And so that to me is really promising. We've been talking a lot about institutions. I think those products will start by appealing to somebody just above your casual retail Cash App user, maybe again, me. And then it may rise actually up to, institutional allocations. I'm actually really curious to see what institutions will start to allocate to after, BTC. I saw somebody tweet out today, who's going to be the Michael Saylor of ETH. Jill Lubin obviously is that today. It's probably going to be a technologist. It'd be really interesting. It would be really interesting to see if one of the tech companies, and again, maybe not one of the 5 that we named at the top, but a different tech company. Ethereum's much more, I think, of a technology plus money play. Makes ETH part of a treasury asset or something like that. It'll be interesting.
Yeah, and we've seen Grayscale recently sort of come out and say, "Listen, we're getting a lot more interest in our Ethereum products now, even than our Bitcoin products." And I mean, they're buying more of both than are being mined, right? This year. Yep. Talk about supply side shock. But I do agree with you that I think that there's a lot of people who are behind the scenes looking at Ethereum much more seriously than before, and maybe even more so than Bitcoin.
Yes. And I don't know if they're looking at it on that 10-year horizon. And you can see it in the narrative. I think most folks who are deep in the Ethereum ecosystem realize that. They're saying, hey, I think there's a 4x, 5x, 10x on ETH here in the very near term. And maybe there is. I don't know. I mean, to me, that might be speculative, like the, call it Bitcoin-led mania of 2017.
Bitcoin to $1 million. Yeah.
Yeah, right. But there's just so much development happening in actual real use cases on Ethereum. That are starting to emerge at significant scale, tokens that sort of rely on Ethereum. I wouldn't say as a reserve asset, but, rely on smart contracts, DeFi and NFTs, real use cases, real money being transacted. And it's extremely bullish, obviously, for Ethereum in the near term.
It's interesting what you said about the indexes, because your average person is just never going to understand DeFi. Right. They never are. I don't yield farming. And when you get really deep into it, but that's why these automated products that are based on indexes are so interesting. Because
by the way, not only that, I interrupted you.
Go ahead. No, please.
Yeah. So, today we just saw, and I don't want to, pick on Hugh Carp or Nexus Mutual, but if the actual person who's, created the DeFi insurance protocol is hacked for $8.5 million, man. Via MetaMask. Like, we got some issues here. This is not something that the average person's going to be playing with or understanding how to secure it today, nor should they. I mean, honestly, they absolutely should not. So, I think custodial or index based or other ways to get exposure. It's how this is going to happen, both on the institutional side as well. I mean, the non paradigm dragonfly 3 arrows institutional side. People who do other things, they're going to allocate. Not by doing it directly.
I mean, you're in New York, arguably the most heavily regulated and difficult place on planet Earth to be in crypto, right?
I can't even use BlockFi, and it's like right down the road,
Yeah. I mean, do you think that regulation is still, I don't want to say the biggest threat, but the biggest hurdle to adoption? And what do you see regulators potentially focusing on in the coming months and years?
Yeah, so I think dumb regulation is the biggest threat, meaning literally not understanding the technology, not understanding how this type of money, cryptocurrencies, are different than sovereign currency, how the assets are held, how they're issued, in the case of stablecoins, and so misapplying regulation paradigms. The easiest sort of mental model I have is like, when you think about how regulators have looked at the gig economy, and you have like full-time workers and then you have contractors, there's probably like a third regulatory tranche that should be like the gig worker, regulation that has elements of both. That's just my personal opinion. There's likewise probably, some regulatory approach that isn't no regulation. And there is regulation today. I mean, we're doing KYC AML. If you're, if I want USDC, I go through that process. But just, saying that we're going to regulate stablecoin issuers, for example, as banks, that's, it's ludicrous. And frankly, so that's bad regulation. And you saw it again with, I think it was FINRA or one of these other institutions that was just hacked, and they retained the information it wasn't FINRA, but it was another one FinCEN, and they hold this data in perpetuity. It's a honeypot. Like, there's some really scary crap going on. CoinDesk wrote a great article about it, and so regulation, I think, brings on risks that can in many cases be worse than the problem they're trying to solve.
You touched on it, but that, I guess, Tlaib-led, is that her name, potential legislation on stablecoins, which I don't believe will ever see the light of day. But my God, so for anyone who's listening and doesn't understand, didn't hear about it, she basically was saying that she wanted stablecoins to be regulated like banks, correct? So if you're going to issue a stablecoin, you had to have the same licensing, the same structures in place as a bank. But the argument was that stablecoins are racist and predatory, and that they don't want people creating stablecoins and taking advantage of poor people. So the answer to that is to make them turn into banks who are actually, predatory and taking advantage of poor people. The jump in logic to me, it bothered me for like 3 days. Anyone who would listen, I just bitched about this potential regulation. But and then even worse than the regulation was, Rohan Gray, who was one of the thinkers, the lawyer
who behind it, and who's clearly an exceptionally intelligent person and understands bank regulation and financial and systemic risks very deeply. But I think is trying to apply them again in ways that are totally tone deaf and antithetical to the actual technology. Has said things almost gleefully, if you look at the tone, about, if it looks like, I think it looks like a duck and quacks like a duck, it's a duck, or something of that nature. But, he's said things like, and it gets back to the platform, sort of Section 230, node operators could potentially, be liable criminally. The implication he made was, but we wouldn't actually aggressively go after them, but that they could be liable for example, illegal transactions that they validate. Right. I mean, it's just, come on.
Leave it to the U.S. government to make crypto somehow painted as racist.
Oh yeah. And yeah, the racism thing, I mean, it's just so comical. It's like banks have systemically, blacklisted and not loaned or given equal opportunity.
I mean, it's
customers
like,
so yeah, let's regulate everybody who's not doing that or may not, like banks. I mean, come on, guys, don't kill innovation while it's sprouting.
And beyond even killing innovation, I mean, it takes about 5 minutes of reading to understand that crypto was literally created or it's used for the opposite purpose, right? To empower poor people. All you have to do is look at any place where they actually have hyperinflation or people don't have access to their money to see how it helps the poor. Like Venezuela, Iran, Lebanon, Argentina, you choose your country.
Right. And you could cherry pick data points that say, hey, the wealth today is concentrated in a handful of Bitcoin whales or Ethereum whales or this, that, and the other thing. But you're never going to get to the point where that starts to change. And it has been changing, right? As new entrants come, as technology is built that reaches these folks, it's unquestionably happening. And we could point to all the examples you just highlighted. And so, again, to nip that in the bud while, we're kind of improving, while quote unquote decentralization is starting to propagate out, it's just insane.
So we've talked about regulation and we've touched on central bank digital currencies before, but, where do central bank digital currencies, what is their role in all of this? I mean, China, we're obviously already seeing it, but what's our maybe time horizon for seeing it, with the euro or the dollar, and how does it affect Bitcoin and crypto?
Yeah, so I read Ryan Selkis's, I love his
130 page.
I think I'm on like page 100. And look, I really enjoy it. Yeah, he's brave and he takes a viewpoint. It's opinion mixed with analysis, but he has a sound understanding of the research as well. Even if what he's presenting isn't research, it's really well thought out. And so he kind of took he said, look, I don't really care. Well, I mean, I don't want to put that word in his mouth, but look, that stuff's 10 years off. I don't think that's the case, right? Like China has more than 1 billion people, and DCEP, their central bank digital currency, is currently in pilots and is launching. And it is clearly a surveillance currency in a society that already has cameras on every street, that you have your national ID. Like this is surveillance currency. If anything, to me, it's a factor we didn't talk about earlier that strengthens the bull case and the necessity of Bitcoin and other censorship resistant currencies. They won't unilaterally or universally, I don't believe, replace central bank currencies, digital or not. But we need the alternatives. There are transactions that have to be private, that have to be unstoppable. We can't put, in the hands of our government, every element of money from the moment of issuance to the moment of spend to how it's recycled, and then reused and where it's stored. And, we've just seen through history, you have to have a way to store your own value and to move that value outside of government purview, and the effect that case, for example, that a country blows up like Zimbabwe, or Venezuela. I'm reading a book, Lords of Finance, about the Great Depression now. And so, it's really important that we have the ability to have some level of financial sovereignty. Central bank digital currencies will absolutely reduce that by default. And it's critical. So anyway, it's not possible to quote unquote regulate Bitcoin anymore. It's or Ethereum. I don't believe there's going to be a pocket that pops up somewhere else. Today to mine those currencies. Later to stake those currencies. With Ethereum, but they're global at this point and distributed. So it's just a matter. It may have impacts on price, but you're not going. These networks are not going away. These money networks.
Yeah, they can't regulate Bitcoin anymore, but they can certainly make it really difficult for you to get money in and out.
Yes, unquestionably.
Yeah, and I think that's sort of the scarier part.
But it's money's a global competitive market as well. So if the U.S. does that or China does that, somebody else might pop up. Yeah. Exactly. So that I guess maybe that's So with Bitcoin, I think that's the strongest point. Is it's just whack-a-mole at this point.
Yeah, and you said obviously that I mean, we can all agree that there's things that cash are great for, right? So if everything becomes a CBDC and is all digital, there will be no more private transacting with cash, which increases the bull case for Bitcoin. Also, I mean, I think just getting more people comfortable with the idea of a wallet and transacting digitally inevitably will draw them towards the original, right?
Oh yeah, absolutely. You're going to be holding, like with your Novi wallet or your PayPal wallet. I mean, you're going to be holding, or you're in China, you're going to be holding in your WeChat wallet, DCEP and whatever other digital currencies, they allow, and the same in the US once this happens.
But it's fun to talk about, obviously, well, not fun at all, but it's common to talk about in the Bitcoin community, the hyperinflation of the dollar, and that's coming, and that Bitcoin will become the reserve currency of the world. But I mean, you've recently even tweeted, I think, that the dollar is still the reserve currency of crypto, right?
Yeah, and increasingly so. I mean, stablecoins are critical to the functioning of crypto markets. It's particularly because we're still in a time of sort of heavy trading and speculation. I mean, that's just a big part of the market. And so the velocity of money that's moving through these markets, not sort of parked in long-term store value, is dollar denominated, because people don't want that volatility while they're trading, that's not the purpose of their strategies. So yeah, I mean, and the markets are functioning. And
right.
So,
yeah. And the proliferation of stable coins, I mean, they are just dollars, right? I mean, people people want to pretend that they're cryptocurrency, right. but at the end of the day, if the dollar hyperinflates, so do your stable coins.
Correct.
Yeah, which is kind of scary. So
yeah, I mean, people are trying to get exposure to the cryptocurrencies. To your point, they're not trying to get exposure to the dollar; they're just using it, as a means for their strategies.
Yeah, I agree. So I know we're kind of up against it with time. So with the block specifically, I guess, and G2M, that's what's G2M. Yeah. What do you
G2M
see?
Ventures. Oh, sorry. Yeah.
No, go ahead, please.
Yeah, but I'd love to actually answer the question you were going to ask.
I was just going to say, so what do you see as like the core sort of competencies of your business evolving over the next year? Because obviously it seems to change so fast. Right?
Yeah, so I called the consulting business Go-to-Market Ventures, GTM Ventures, because I basically looked at the crypto landscape and said, hey, the thing that I think most of these entities have difficulty with is not creating really cool technology, but actually taking it to market, explaining it to people, selling it, marketing it. And I've done that before for very popular products. And from Venmo to before that, what now is Google Pay, and you're populating that. And when I say go to market, it's not only to the end user, the end retail user, but also, again, the institutions who will use these products. So, with Immune, it could be the exchanges that might want to list these tokens. I work with another company called Nash, which is an exchange based in Europe. Yeah. So non-custodial exchange. And so I love the ethos of Nash, and, working with them, it's a fantastic group of folks, where the founders are 5 developers. They have skill sets beyond that, but I can work with them to bring sort of a go-to-market prioritization strategy and work with their business team, not only to make introductions, but really strategically to say, hey, here's some best practices to go from X to 10X.
So it's really top to bottom services, obviously. And it's so important because in any nascent industry like this, you have this core of tech people who are so hardcore and brilliant, but literally don't know anything about anything else when it comes to.
Yeah, I've lucked out. I think, I try to avoid companies that don't know anything about it, like ones who realize the value of a sound go-to-market strategy, will listen, to folks who have done it before, and then we'll invest behind it, right? Because I can only work with a limited set of companies. And then, as I look long-term, I said it earlier, but I'm really excited about, the application of stablecoins and new, call it payments or money movement rails, not like ones that depend on volatile cryptocurrencies like XRP, but sort of low cost global rails that move money. It's the area that I participated in So at the previous companies that I've worked at, in long run, I'll probably build a business in that area. It's going to be a year, 2 years, that kind of thing.
I love that that's the long run. In crypto, that's the long run. Like if you had a 10-year in 2010, if someone said to you, what are you going to do in long run? Well, 10 years down the road, I might. And now
Isn't
it's
it
like
crazy? It feels like I've lived multiple lifetimes. Yeah. And with the block, look, I thought just crypto moves at light speed. And so our current CEO of the block, like I'm chairman now, he's came through Wall Street, incredible understanding of financial markets, great leader. His name's Mike McCaffrey. We're all Mikes at the block.
Seriously.
I just said, look, he's a better leader. I'm an intense, volatile, outward personality. Like we need a leader where the focus is on the work that these folks are doing, the incredible work and that brand. And it's an institutional brand. So anyway, he's been doing a great job. But yeah, things just changed so darn fast.
A year. I love it.
Right.
When I retire in 18 months, I'll be able to focus on my hobbies.
Exactly.
So where can everybody keep up with you, follow you after this?
Yeah. So if you want to see my tweets for 48 hours at a time before I delete them, at mdudas, at MDUDAS. But yeah, look, I have my DMs open there and I respond to pretty much everybody who reaches out. And I really enjoy the conversation these days. And frankly, I've really been heartened by the conversation and how positive it's become. We have a lot of folks who have moved from maxis into a lot of the most thoughtful people are now interested in multiple cryptocurrencies. So for the last 6 to 9 months, I've just been really having a blast, as much publicly as I have sort of privately in DMs. And I'm also at MDUDAS on Telegram.
Awesome. Well, I really appreciate you taking the time. A lot of really interesting insight here, because so many people don't understand what it takes to actually understand this market, put all that research together when it's so incredibly scattered and brand new. And then to obviously then be able to use that to project what's coming. It's just a rare person. So I appreciate you giving us that insight. I think people are going to absolutely love the conversation.
Really appreciate it. Thanks so much, Scott.
Thanks, Scott.